Okay, joining us now on Salt Talks is Pascal St-Jean, who's a partner of mine, by the way. He's running a company, president and CEO of 3iQ, which I would describe as a leading digital asset manager, pioneering in institutional grade investments for forward-thinking institutions. And by pioneer, Pascal, you brought the first North American Bitcoin ETF to market. I'm a proud investor in that. And you brought the first North American, I should say, Solana ETF to market, and we're also a proud investor in that. And just quickly on your background, Pascal was an active angel investor and served on different advisory and executive roles at over 5% of the Globe and Mail's 500 fastest growing companies in Canada, where he was named one of the top 40 under 40 in Canadian business. Pascal, I'm hoping to be named like the top 70 under 70 at some point in my career. I'm a late bloomer, Pascal, but love your life experience, your experience in open source technologies, distributed systems, caused you to make a cryptocurrency investment in 2016, which has served you and your family well, of course. But in addition to that, you've been a phenomenal educational resource for so many people, which is why I wanted to bring you on today to discuss what 3iQ is doing. So let's start with that. What is 3iQ's approach to designing these digital asset products? And I know you always have the institutional investor in mind, but you're getting a lot of retail as
Yeah.
well. So tell us what you're thinking before you package and put these products together. And welcome to the show.
Thanks, Anthony, and thanks for being a partner of ours and for supporting us over the years. Look, for us, if we solve for institutions, it means it's also retail ready if possible in the right vehicle. But it really comes down to the birth of 3iQ, like you mentioned, being the first to launch crypto ETPs in North America meant that we had to solve regulatory, challenges, overcoming infrastructure challenges, and solving for a lot of components that just didn't exist in the marketplace back when we were starting this journey in 2017. So we're 2025. I can't believe it feels, it doesn't feel like it's almost 10 years, but it's been almost that long. The products launched in 2020, but where I share that is that solving for helping to create regulatory clarity in Canada, bringing together TradFi parties like insurance, banking, traditional custodians, and then integrating them and introducing them to crypto counterparties like Coinbase, custody, prime brokers, etc., allowed us to become known as sort of these institutional crypto experts in the space. And since then, yes, we could debate, in 2017 to 2020, if Bitcoin was institutionally ready or not. Of course, it drove a lot of retail flows. But today, I think we're seeing it across the board. You're seeing it. We're seeing it. Institutions are finally here. And so our past experience of bringing sort of that, secure, simple, safe types of investments have allowed 3iQ to continue to pioneer beyond ETFs. I know we'll talk about that a little bit. But for us, that's the focus. It's about protecting capital by bringing the best infrastructure possible and regulatory clarity. And that's what makes institutions comfortable and by default makes it very attractive and appealing for advisors and retail.
So, Pascal, I've been humbled by life and markets, and I've had my ups and downs in my career, which are fairly well documented. But I feel like we've gotten this right. And what I mean by gotten this right is the digital asset revolution, things like Solana, things like Bitcoin, the adoption of these things. Yet, I'm an old fogey. People over the age of 60 look at me still somewhat derisively and say, okay, you're a bozo. You don't have this right. But so the question before we get into the ETFs and so forth is, do you and I have this right? And if we do have this right, why do we have it right? And what are the people that think that we're not right? What are they getting wrong?
So I go back, I talk about this in my keynote because I think history doesn't repeat, but it rhymes. I've seen this cycle, anything to do with technology. It's not just about digital assets. So if we go a few minutes backwards to the tech boom, and we go even further back to the train and railway boom back in the much earlier days. But let's just stick with the web at that moment in time. The people that are in it, and I'm an engineer by trade, so I'm in it. I write code, and you have a vision of what that could bring to life. You always think it's going to happen faster than it actually does because the code works, right? So when we were talking digital assets or smart contracts or things of that nature 7 years ago, it worked. It wasn't necessarily as efficient as it is today, but it worked. And so as an engineer, you sit down saying it works. So my vision must be true. So why aren't people adopting it? I think it comes down to cultural change, and then that just takes time, right? And I know I follow your other podcasts. You're deep into politics. You're deep into sort of like history, and fundamentally, changing human behavior, changing ingrained systems takes time. And so I think for us, there's sometimes just a misunderstanding of how long does it actually take, not for the technology to do what it's supposed to do, but for it to come to a realization. If we go back to the early web, that was exactly it. The dot-com bust, boom and bust, was a representation of the vision that, everything that was there. And I think it was in the All In podcast this week that we're playing, or another podcast I was listening to, sorry, they were talking about old AT&T ads from like 1993. And those ads were really cool because they were saying in the future, you'll be able to do this and do that and speak on video and self-driving and those kind of things, all powered by the internet. And so it was a sort of vision casting ad that back then was revolutionary. You fast forward to today, 30 years later, kind of all true. It just didn't happen in 2001 when everyone thought it was going to happen in 2001. So here we are today, Web3 revolution. I still think, we're going to see another 5 to 10 years before everything we know is going to happen is going to happen. But I think we do have it right. If the failure would have happened technology-wise, would have happened beforehand, these systems and networks are only getting more secured every cycle. Adoption is, and regulatory clarity is now, better than it's ever been. And the direction of the technology, regulatory adoption, institutional adoption, and real life use cases is up and to the right. So as an investor, I look at the chart up and to the right. I'm pretty bullish.
Listen, I completely agree, and I think you explained it better than me. I think ultimately, if you have a better technology, Pascal, it works. There were people
Yep.
looking at the horseless carriage and saying, that's a fad. I'm going
Yeah.
to stick with my horse and buggy. Henry Ford once said, if I asked my customers what they wanted, they want faster
Yeah.
horses. They don't want the horseless carriage, right?
Yeah.
And so we're there now. People are looking at this, wait a minute, this technology is going to make things faster. It's going to make things more secure, and it's going to make things cheaper in terms of the way we transact with each other. So let's talk about a layer one technology, Solana.
Mhm.
Skybridge recently made a $50 million investment into the 3iQ Solana staking ETF. The symbol is SOLQ. So that's SOLQ for viewers and listeners at home. What is SOLQ and how is it a unique and differentiated product? And I think I want to start with a few sentences on Solana, why we both like Solana,
Yeah.
and why you wrapped it the way you wrapped it, because I think the staking aspect of this is absolutely brilliant, which is why we put so much money into this ETF.
So for us as a firm, we bring together two types of individuals: people who have been there, done that in TradFi, and see that there needs to be change, and so they're believers in the technology. And then we have our analysts and our technologists and people who've just grown up in the crypto space and believe in the cultural change that it could bring. So it's a really interesting culture that we have, where you have people who've been there, done that, want to see change, and you have people who have seen sort of legacy system that needs to change, and we're very passionate about this. I share this because the goal is not to bring products to life just for the sake of bringing products. Some jurisdictions, you could bring any asset to life in a wrapper pretty easily. It's a lot different in North America. We've seen that in the US, we've seen it in Canada. Requires tremendous amount of work. And so for us to be able to take that time, it takes about 2 years for us to work with the regulators, to educate them, to build a framework. And then at the same time, we want to launch a product that we believe in, so that, because we are committed to bring things that will, help the ecosystem grow, but also help investors as well. So Solana for us, as from a technology perspective, we were very bullish on the smart contract trends from a technology perspective. And we could have this debate. Are there layer twos being built on top of Bitcoin and things of that nature? As a technologist, I remember back 20 years ago, I had coders, we get a little technical, saying that they were very bullish on JavaScript and they were creating amazing products using JavaScript. But you know what? I'm like, you could write anything in JavaScript, but some things are not meant to be written in JavaScript. So where I'm sharing this is that, can you build scaling solutions on Bitcoin? Yes. but smart contract technology to scale at the amount of transactions that are needed to compete with the Visa networks and other networks globally requires a fresh thinking. And we saw the beginnings of that with Ether, but we saw the evolution of that with Solana. And I think that's where it got us super excited in terms of the speed, in terms of the throughput, and in terms of the ease of development that could be done on that layer one settling technology. Now,
Talk
people are
about the
hearing us.
stake. Yeah, yeah. Brilliant. Talk about the staking. How does
Yeah,
the staking work?
exactly.
How does it function inside the ETF wrapper?
So we were bullish about that. So we went on the journey of getting Solana approved with the regulators. Then step two was, to your point, how do we build institutional grade products? So the key of going to market for us was we wanted to solve the conundrum. So you as an institution, if all we did was provide an ETF without staking, then Skybridge has to make that decision, or you, Anthony, have to make the decision. Do I invest in just Solana, or do I buy Solana on my own and stake it because I could get that extra yield? So we wanted to solve for that. And so staking for us was another long journey, which we got solved. And the difference here in this product versus others is that because we're 3iQ and we're connected with the ecosystem, we've partnered with some of the very best technology providers, like TwinStake and Figment and others. And because of our expertise in liquidity management, we were able to not only bring staking from a regulatory perspective, we were able to bring institutional level staking so that anyone looking to deploy it makes more sense and more cost effective, and you'll get a better performing yield by coming into an ETF that's designed by 3iQ than by buying Solana and doing it on your own in terms of the cost, the risk, etc. And so that's at that level of caliber that we've been able to wrap this. So it's not a lazy way of staking. It's a very sophisticated way of staking to a point where we're going through multiple types of institutional diligence process today, and we're going through it without any hiccups. And then we're talking about some very large players starting to evaluate this specific product. And so staking in its whole, to answer your question, helps secure the network. So instead of Bitcoin mining, you're staking the assets. So you're ponying up your Solana as collateral, and you're helping to participate in the security of the network. And in return for that, you're getting paid a yield. And so wrapping all this together, getting exposure to the underlying technology, which is sort of right now one of the leading smart contract platforms in Solana, and you're getting the participation of the yield. And at the same time, you get the feel good that your assets are helping to secure the network. So it's a triple win for everyone.
So I know the yield moves around a lot, but what is the range roughly of the yield? And we're not holding you to it. We just want to explain it to viewers and listeners.
Yeah, so basically, right now the Solana sort of monetary policy or the yield range is between 7 and 8, and that will depend on in terms of how the community votes on things. So, for example, there was a vote a few months ago that retained the current yield, and again, yield will factor in based on attracting developers to the space, attracting assets to be staked to help secure the network. So that policy may change over time, but right now Solana has found an interesting sweet spot where the yield is interesting and appealing for investors without overly diluting the overall network. And in terms of what can we provide, and it becomes of how much of your assets can be staked. And this is kind of the secret sauce. This is where it will vary month over month, but based on liquidity management, the technology providers we have, and the regulation that we've been able to achieve with the OSC in Canada, we're able to stake a high percentage of the fund. I can't give you a specific number because it changes all the time, but net in return, the investors doing very well, and which is why our current SOLQ product is outperforming every other global Solana product because of that boosted yield that's being accrued back to the NAV for investors.
Yeah, so that's a good segue. I want to talk about institutions. Like when I analyze this, you and I met a consensus. I said,
Yeah.
okay, I'm in. We put $50 million into the product. But talk about the challenges for other institutions that are not perhaps as forward thinking as you and me. What are allocators saying? How do we get allocators over the hump to make more substantive investments in digital assets?
So the first is, I think, ETFs beyond Bitcoin are relatively kind of new, right? So this is still not there and starting to get there. So we saw, I think we talked about this on stage at Consensus. We saw when Mubadala and other large institutions came into Bitcoin via the Bitcoin ETFs, it became an investment decision, no longer a compliance decision, right? Whereas we've both known some of these large institutions. We've traveled the Middle East, we've been in Europe, we've been across the world, both of us, And we've had the allocators wanting to allocate, but compliance saying how are we going to custody and what's the risk profile, et cetera. So the ETFs, step one, helped solve for that. So now that we got beyond Bitcoin, so you got the wrapper that institutions can invest in. So that's step one, and these are all brand new into the market. Step two is the understanding of what's the case beyond Bitcoin. This is where I'm quite excited and bullish more recently as we saw Circle go public, as we saw more companies talking about tokenization, talking about stable coins, the Genius Act, etc. All these things are now allowing us to simplify the language when training and talking to an institution of why beyond Bitcoin. Because before it was all hypothetical. Yeah, smart contracts, tokenization, that's great, but what's actually happening out there? And there was this disconnect between what the technology can do, where the real world was in adopting that tech, and for an institution to believe that that was going to happen. So today we're in that sweet spot where the technology works, the use cases are real, and now the institutions get it, and now they have the right wrapper. The final piece missing is size. So an institution needs enough size. If we got someone who wants to deploy 100 million, you need a product that's at least 3, 4, 500 million in size because they don't want to be 80% of the fund. And so those are the things that we've solved now at the size that we're at, the staking that we have, the regulatory clarity, and the proper wrapper. And so I think what you're going to continue seeing in the next 12 months, and we're seeing it because we're going through diligence and conversations, is that institutional adoption of digital assets beyond Bitcoin starting to really ramp up.
This is sort of a universal question. You often, because I hear your speeches, I love again when you come on, I tap onto my YouTube. You often refer to investing as using digital assets as opposed to investing in digital assets. Explain that. Explain what you mean by that.
So this is a term that I've coined when we speak with investment committees, because there's two ways of looking at this, because it's the first time in history where the technology is also the asset class. What do I mean by that? So back in the day, if you were bullish on search engine tech, right? You'd buy Google or look at some of its competitors. If you were bullish in EVs, you buy Tesla or you buy an ETF of a basket of EV stocks. And so the investors could wrap their heads around the technology and then what are the equity companies that I can invest in that give me access to that underlying technology. When it comes to digital assets, the tech is also the asset. And so if you're bullish on the tech, you have the ETFs. If you're a believer in the Solana sort of vision and the technology, you can buy and invest in digital assets, literally buy the technology and not have to worry about sort of operating risks or people risks and governance risk. In other words, you're just buying into the technology. With that being said, because it is an asset class, not just a technology, there are markets, there are global markets, and with that comes the opportunity of tapping into what we call P&L. And so if you're bullish on Solana, you could buy the tech. But Solana trades 24/7 across the globe. You could do interesting trades like the basis trade on Solana. You could stake the assets. Hedge funds are starting to use some of these assets to bring their CTA strategies that they used to trade on, oils and commodities and bring them into, the digital asset space. And so we call that investing using. So you're using the digital asset to generate a P&L or an investment outcome that you're looking for versus investing in digital assets, which is investing into technology. And so these are two ways of thinking. And when we start thinking that way, it helps investment committees understand, are we interested in the technology and where does that fit in our portfolio? Are we also interested in the P&L that can be generated by some of these active strategies? So that's what in versus using means when we're doing education with these larger players.
I have a lot of friends in the industry, hedge fund managers, asset allocators, family offices.
Yep.
They use ETFs for different reasons. Tell us the different ways that these ETFs are being used by sophisticated investors.
That's a great question. And we're seeing a trend evolve now that you have more sophisticated markets being built around that. So, of course, like I said, the ETF wrapper, there are hedge funds that use our products that we're good friends with, that have become good clients, that believe in the technology, that are long and want the exposure. In ETFs, the easiest wrapper, they don't have to worry about the custody and things of that nature, and it's a regulated product. So you'll see some just use it to simplify access to the underlying technology. With that being said, you now are starting to see some utilize the ETFs to put on more sophisticated trades. What do I mean by that? I think one of the most common one that we hear, and this could be language that may be new, but the cash and carry trade, a basis trade, is very common in most commodities, but it's very appealing and sometimes juicy in the digital asset space. And so you're seeing billions being deployed in these ETFs, primarily the Bitcoin ETFs to start. And when we saw some of the market shifts when Bitcoin rallied to 119 about 5 months ago, and then came back down, you were seeing the basis being quite high, and so you were seeing hedge fund dollars move into that and then leaving. So because they have futures on the CME, they have options market now. They're using these ETFs to generate more of these sophisticated trades. What's interesting now is that these ETFs and the futures market are launched for Solana. We're seeing similar things starting to trickle in. So we're starting to see some inbounds, exploring utilizing our ETFs and et cetera in Solana to start mimicking what they used to do on that. So you're seeing those two things: hedge funds deploying for access to the tech, and hedge funds using the liquid markets, the ease of use of ETFs, and then the regulated futures and options market that we're seeing booming in the US to put on different types of trades. So it's super sophisticated.
I think the reason I'm bringing it up, Pascal, is that there's a ton of demand for
Yes.
the product, and
Yes.
it's an easy to use product. It's obviously very liquid. You can come in and out of the product very easily. And when you think about it, if Solana has a 7 to 8% yield, you're not only picking up what the potential growth is in the network of Solana, which you and I are very bullish on,
Yeah.
but you're also getting incremental Solana just staying in there to wait. So, so what role do you think these digital assets will play going forward in creating a balanced portfolio alongside of equities and fixed income?
I think I mean, we were talking about this, 5, 6 years ago, where the 60/40 is kind of dead. And I think we're seeing that now, that language being used across the board. Now, not everyone's bringing digital assets as the solution, but the theory that the 60/40 portfolio is dying or is dead, I think is becoming common knowledge or common discussion point across the investment space. So then that becomes the reimagination of what the portfolio should look like. And again, we see it in two ways. And this is where, again, we do a lot of education. We're saying, well, if you're bullish on alternatives, then let's break down the alternatives market. And how can tokenization help bring more liquidity and more scale to these different types of alternatives? And guess what do you need to tokenize all these funds? You need Solana, or you need a layer one type asset. So you should be bullish on the technology as well. And that technology should be treated as an alternative. So we see the modern portfolio that's being discussed as 60/40 equities alternatives. And in that alternatives, we're seeing an ever growing pie allocate to digital assets. I think based on the latest sort of GMP, the global market portfolio, right over 2% of the GMP, which is the global market portfolio, in digital assets. And now we're seeing research reports start coming saying 5 to 10% allocations are some of the recommendations. And so once people understand that the shift of sort of the financial rails are shifting to digital, and now for the first time ever, the technology is also the asset. You could literally own a part of that technology. People are starting to click in. And with the reimagination of these portfolios, they're now starting to propose bigger allocations. So we see a 5 to 10% sort of conversation across the board. And within that 5 to 10% will be a diversified basket of the biggest and most liquid sort of digital assets, and Solana fits in that. And so, for us, I wouldn't be surprised if Solana is 1 to 2% of a portfolio in the future as this continues to scale.
So, Pascal, we're at the point in our discussion where I'm going to say some words to you,
Yep.
and then I want you to give me your knee-jerk reaction to these words, okay, and tell me a little bit about the future of these words. So
Okay.
let's start with the word Bitcoin.
So uh, I think Bitcoin is becoming the macro hedge that we thought it can be. I think the purists, or those who've been here from the beginning, and sorry, I'm supposed to give you just a few words, but I think it's important to understand that Having lived technology so often, the people who are there at the beginning have a vision of what it can be. And then as it grows and it integrates itself into society, any technology, it shifts to evolve into what society wants it to be. And you have to accept that. When the masses come in, it will change. And that's happening to Bitcoin. So just like open source, when it first started, was supposed to destroy Microsoft, today Microsoft's the biggest user and creator of open source technology. So to me, Bitcoin has shifted from, a get disassociated from government and becoming a separate financial ecosystem. It can serve that in certain countries, to now becoming clearly a macro hedge at the institutional level, digital gold for a digital age. And you're starting to see that in people's minds. So I still think it has lots of room to grow, but it has a very specific purpose, and it's designed to do something different than these layer one chains.
Okay. So that's my next question though. Let's talk about
Yeah.
layer one chains. I say the words layer one chains to you. You say what?
Yeah, so for me, layer one, when I'm talking about layer one, settlement chains, it's around the smart contract sort of technology primarily. So it's scale, speed, and smart contracts. Because without the smart contract, then you really can't do anything beyond simple transacting like you're doing on the Bitcoin network, right? So you want the smart contract aspect to be able to say, how do we cut the middleman? How does Anthony and Pascal drive a financial contract with each other without a middleman? It's through smart contracts. So through smart contracts, you have tokenization, you have all these things that are possible to reinvent the financial digital rails. And so that's what I when I say by layer ones. But with that comes the responsibility of speed for a growing amounts of transactions to reinvent the digital rails. And so we're quite excited about that because you're seeing that adoption at the institutional level, and a lot of firms like DTCC and others who are just using this as background technology. So you're going to wake up one morning and all of this will be recreated and you won't even know it. It will be abstracted from the user interface. And that's where layer ones are going.
I say tokenization. You say what?
So I say two things. One, I say bringing, uh, you know, hard to access, products, investment products to the masses. So the technology can enable that. Okay. The challenge is regulation needs to adapt. So my hope is as the technology demonstrates that you could bring more types of investments to the world over, whether it's in real estate funds or whether it's private equity products or anything else we could imagine, um, that accredited investor rules will also shift to enable, more and more retail to participate so that people could have a diversification and a part of that American dream that we all, why should only the two of us have access to more sophisticated products? So to us, tokenization is important. It's the technology that enables it. And hopefully with that comes the regulatory change to enable and empower people to invest globally.
Okay, this is the last word. I'm going to give you the last word. The future of global finance.
That's a big one. To our vision, which is part of our mission of like how can we as put the lens of an asset manager, which is an expert in digital assets, to help bring that over. So the future of digital finance in our world is a globalized investment ecosystem. What does that mean? That means that no matter where you're living, because we're seeing global citizens and global passports taking shape, right? Remote work, right? So the Web 1 and Web 2, all the previous technology, we're now here in different cities recording a webinar, which will be distributed around the world. So we could work from anywhere. And so how can we access investments, banking systems, and financial services anywhere equally across the board, regardless of where you are? To me, that's the vision that we hope that this technology can enable. And as we continue to bring those products to life and do the hard work with the regulators and do the hard work on the education side, again, probably decades away, but that's where I think things are heading.
Well, listen, it's been an unbelievably terrific conversation. Uh, what's next for Pascal and 3iQ?
So a lot of exciting things, but one of the bets we made a few years ago was that at some point, institutions were going to go from, let's cover our behinds by ignoring crypto to now what we're seeing is we need to cover our behinds by having a crypto strategy. We need to catch up. And this is something we felt was going to happen. We didn't know when, but we positioned ourselves as a company to be able to do that. and it's starting to pay off. So what's next for us is you're going to start seeing a lot of big name partnerships coming up with 3iQ, where we're helping global names, recognized institutions that people know come into the space by offering joint venture products, by being a white label advisor, by being the sort of their experts at the side table. But what we are seeing is the names that you would never thought would be coming this early in the game starting to get into the game. And so that's why we're saying we're very bullish and very excited about the future, because it's no longer just a small community with a vision. It's becoming real. The use cases are real. The adoption is real. And I think we're in for an exciting 5 to 10 years ahead.
I greatly appreciate you joining us on Salt Talks, Pascal, the president and CEO of 3iQ, Pascal St-Jean. It's a pleasure having you on the show with us today. Thank you for joining Salt Talks, Pascal St-Jean, the president and CEO of 3iQ.
Thanks, Anthony. Pleasure to be here.